The first category of the financial term that each businessman needs to know is called assets. Assets are the economic resources a business has, which includes the product it has in inventory, the office furniture, and the supplies purchased for use. It can also include any trademarks or copyright it owns. These assets counts towards the value of a business since they could be sold if the business experienced difficult times. The second term is called liabilities. Liabilities includes any debt accrued by a business in the course of starting, growing, and maintaining its operations. It includes bank loans, credit card debts, and money owed to vendors and product manufacturers. Liabilities can be divided into two major types. Current, which refers to immediate debts such as the money owed to suppliers, and also the long-term debts, which refer to liabilities such as the loans and the accounts payable for long term. Third important financial term is expenses. Business expenses are the cost to the company. These are the expenses they incur each month in order to operate the business and business operations. These expenses include rent, utilities, legal costs, employee salaries, contractor pay, marketing, and advertising costs. To remain financially solid, businesses are often encouraged to keep expenses as low as possible. The fourth financial term is cash flow. Cash flow is the overall movement of funds through your business each month, including income and expenses. Businesses track general cash flow to determine long-term solvency. A business cash flow can be determined by comparing its available cash at the beginning and at the end of a specified period. The fifth financial term is profit and loss. To remain financially healthy, a business must have a regular profit that exceeds its losses. Profits and losses are usually itemized on a profit and loss statement, also known as income statement. The sixth important term is capital. In a business, the money a business has in its accounts, assets, and investment is known as capital. In business, there are two major types of capital. First is debt, and second is equity. The seventh important term is accounts receivables. Accounts receivable is the amount a business is owed by its clients. Usually, the client is notified by invoice of the amount owed, and if not paid, the debt is legally enforceable. On a business balance sheet, account receivables are often reported as an asset. The eighth important term is accounts payable. Accounts payable is an accounting entry that represents a company's obligation to pay off a short-term debt to its creditors or suppliers. It usually appears in the balance sheet under the heading current liabilities. The ninth important term is depreciation. Over time, a business assets decrease in value due to the time that has passed since it was purchased. For tax purposes, a business can recover the cost of that depreciation through a deduction. The 10th important term is income statement. The income statement is also known as a profit and loss statement. An income statement shows the profitability of a business during a period of time. The income statement looks at a business revenues and expenses through all of its activities. 11th important term is balance sheet. A business balance sheet gives a snapshot of the company's financial situation at a given moment. This includes the cash it has on hand, the notes payable it has outstanding, and the owner's equity in the business. The 12th important term is cash flow statement. A cash flow statement shows the money that entered and existed a business during a specific period of time. It generally covers four main categories: operating activities, investing activities, financing activities, and supplemental information. 13th important term is financial statement. Financial statement lists all of a business's financial activities. However, a financial statement is generally a more formal document, which is often issued by a lending institution. The 14th important term is financial report. A financial report is a comprehensive account of a business's transactions and expenses, created to give a business oversight of its financial matters. A financial report may be prepared for internal use or external sources. Last but not the least, valuation. When a business seeks funding from investors, those investors want to know the overall worth of that business. This is accomplished through a valuation, which is an estimate of the overall worth of the business. A business owner doesn't have to be a financial expert to be successful. However, it is important to know the basic financial terms that will come up in conversations with colleagues, potential clients, and investors. By maintaining oversight of operations through financial reports and budget maintenance, a business can increase its chances of success. This summarizes the summary for 15 important financial terms. I hope you like my video. Please share with others, post your comments, and don't forget to hit the bell icon.